Hello, welcome to another episode of Coffee and Stocks. In today's video, we are going to talk about some common mistakes that investors make and what you can do to reverse that as well. But before we get started, how about we get some coffee? Woo! I just want to get one thing straight, and that I'm not a financial advisor, so please do not take these words as advice. This is pure opinions of mine. Don't forget to drop that like button, press it, as well as press that amazing subscribe button. Don't forget I am doing the $60 giveaway, and on Friday I will be pulling out the winner. Press that subscribe button. It does go a long way in supporting the channel. If you ever want me to talk about certain and different stocks or opinions or whatever it is, comment down below and I will do that for you guys. But let's go ahead and look at the heat map. Look at this thing. Everything but the tech market kind of had a bad day, right? You see Microsoft up 1.51%. You see Apple up 1.35%. Facebook, Google, Amazon up 2.45%. Microsoft actually had a pretty good earnings, and I don't know if I'll do a video about this tomorrow, but they did beat expectations, but something about the Xbox kind of dinged their quarter debut, but they did beat earnings, which increased their price today. But let's go ahead and get started with our top five, not top five, but common mistakes that people do when they are investing, which can be pretty scary, which can be it kind of puts you down when you don't get money from the market. But let's go ahead and look at number one that I think it's a common mistakes amongst investors, and it's expecting too much from yourself in the market, right? So, like it or not, the simple act of investing, won't solve all your financial problems. It's easy to think that because you're now investing in the stock market or in anything in general, your problems are solved and you're gonna start racking a whole bunch of money. But that's not necessarily true, so don't get discouraged if you don't get, your $1 million the next day or something. You just have to keep on investing. Don't expect too much, but set a certain goal. And I honestly think that's the number one common mistake that a lot of people make. While investing. Number two, since I talked about having a common goal, people don't have a clear goal when they're investing. For most people, it's not a problem, right? But for some that are barely beginning to invest, like myself, I just started investing this year, it's hard to set a goal because you start investing and then you check the next day and it's like, oh, you went down $5. It's like, well, this kind of sucks, right? But you have to set a current investment goals. What are your goals in 6 months? What are your goals for this month? What are your goals in 1 year? What are your goals in 5 years? What are your goals in 10 years? You know what I mean? And that's the way you start picking some of those stocks or bonds or whatever it is, right? So say, for example, me personally, I set my goal for 1 month to be at a green light, right? So green light for me it's just, if I invested $100 in 1 month, I better be at least $100.01. That's what a green color is for me, right? And in 6 months, I better have doubled it, something around that area. And a lot of people don't have goals, and they should, because it gets tricky when people are investing for reason besides retirement, right? So me personally, I am investing because I want to retire with a good chunk of money at the end. Now, if you're not investing towards your retirement, you're investing for something else, what is that something else, quote unquote? What is that thing that you want to reach? Because once you see that in the horizon and you're about to reach it and you reach it, you set another goal and then you keep walking or you keep running, etc., etc. So have a clear investment goal. Number 3, not being diverse enough, right? Diversification in investment simply means having your money spread across a lot of different things. Ideally you're spreading your investments, your money across different types of assets, cash, bonds, stocks, real estate, things like that, collectibles even, being diversified, because, just because one of those things drop in value doesn't mean that the others will. And now if one drops, you're not losing a lot of money, therefore you're not going to suffer. So it's a common mistake for someone to just go all in on Tesla, for example, go on in on Microsoft, go on in on Apple, and then Apple goes down, Microsoft goes down, Tesla goes down. But then you could have the financial, sector go way up, So you could lose a lot of money if you're just in one sector, say, for example, the technology center. But then if, say, you split 50-50 between technology and financial, you're only losing a little bit on half of your assets, right? So have that in mind, because it is a huge it is a huge issue. Now I do want to say the fourth one that I will talk about today is not doing your due diligence. A lot of people don't do this. A lot of people don't look at stocks and you don't do your homework. You just see that, oh, it's trending up, so I should probably invest in it because it is trending up as well. That's not how stuff works. You have to do your homework. You have to do your due diligence, because investing in in something other than someone talking on the head just because someone did a YouTube video, that's not doing your homework, right? Quite often mentions in the media like, oh, this stock is trending today, this is a top winner today. Yeah, but why? Just because someone hyped it up doesn't mean it's trending towards the upside. No, a lot of big financial companies, they hype things up, then they spike them up so people keep buying in, and then they sell, and you're stuck with having a negative number or lost a lot of money. So be wary of it. Put your time in research and invest invest after you do your due diligence and your homework. Now, there's a few things that you can do to address and to fix some of these problems. You have to learn how to invest, right? And I'm not saying that I'm a financial advisor and I know how to invest, but knowledge is power. The most important thing that you could do is learn, and never stop learning, right? Because if you never stop learning and say, for example, you learn quite a bit from investing, experience makes perfection, and you just keep on going, and that's how you get more of your returns. Yes, right? But then you set up other skills, and then just because you know how to invest, you can now learn how to flip homes, for example. You just keep learning and learning and learning and learning. Guess how Warren Buffett got to this point? He just kept learning. He just kept doing his homework. That's the way you got to go. Right. So another one is manage your investments yourself in a way where you have control over it. Because a lot of people just put their money and they just let someone else do it. And yes, that was the way people did it before, but it's not the way it could be done now. And a lot of people, they just leave the money to the real investors, but you're paying a huge chunk of money. Right? If you do invest in a low volatility kind of market, not market, but a stock, you're able to know what kind of trend is going to go to the future. And this kind of ties in with always learning how to do manage your money and learn how to buy stocks and sell stocks, because that can make a huge difference. Now, another one is stick to a simple strategy. The simpler, the better. Stick to your retirement savings if if that's a target of yours. Stick to certain domestic stocks, international stocks, bonds, cash, real estate, etc. Just stick to it until you get it 100%, and then move on to the other thing. But don't move a huge chunk of cash out of there, because that could hurt you in the long run if you don't invest your money correctly. Fourth, this is gonna be my last one. Fourth, ride out the ups and downs. Currently in our market right now, we are in a weird state. We are probably going through our downs in the market right now. You have to have a thicker skin when the market goes into the red. You have to have a better understanding when the market goes down, why it's going down, why it's in that side. And if you have a little bit of cash on the side, you could buy the bottom of those prices, and then when it comes back up, because eventually everything else comes back up, you're riding that up wave, and you're gonna get huge returns, right? So think about it. Don't panic sell. Don't do any of those crazy things that a lot of other people are doing. Stick to your plans. Don't make those common mistakes. Be diversified, be smart with your money. And we're all in the same boat. Honestly, I've only been investing for this year, and I've been doing all right. I haven't been doing amazing, but I've been doing all right. And a lot of people are in the same boat that I am, right? I haven't gotten my $1 million. No, I haven't even gotten $10,000, right? In profits. But I have a set goal for myself, and I intend to reach that goal. As of, you guys should also have a certain goal. What is your goal? Comment down below. What's your goal for your portfolio? I want to retire with this portfolio. I want to sip margaritas and pina coladas in the beach of the Virgin Islands or something. What is your goal? What is that goal for your future? Let me know in the comments below. This has been Coffee and Stocks. Don't forget to drop a like in this video, as well as press that amazing subscribe button, because when you do that, like, subscribe, and comment, you guys can be selected to win the $60 e-gift card. All right, so I will see you guys next time on Coffee and Stocks.